Ever wondered how some people turn a small paycheck into a sizable fortune? It's not always about winning the lottery or inheriting a vast estate. Sometimes it's about making smart decisions like investing in stocks. Now you might be thinking, stocks? That sounds complicated. But in reality, it's not as daunting as it seems. Stock investing is a world filled with curiosity and intrigue. It's a journey of discovery, where you uncover the potential of businesses, big and small, and decide which ones you believe have a promising future. It's about understanding trends, assessing risks, and making informed decisions. The beauty of stock investing is its potential. It's the power of turning a small amount of money into a substantial sum over time through the magic of compound interest. It's about being part of a company's growth story and reaping the rewards of its success. Stock investing, when done right, can be a game changer. Want to learn how? Stay tuned. So what exactly is stock investing? Imagine walking into your favorite bakery. The smell of fresh bread fills the air, and you think to yourself, I wish I owned a piece of this place. In a way, that's what stock investing is all about. It's about buying a slice of a company and becoming a part owner. This slice, or stock, represents a claim on the company's assets and earnings. As the company grows and flourishes, so does your slice of the pie. Now, let's dive a bit deeper. Stocks are bought and sold on exchanges, marketplaces where buyers and sellers come together. These exchanges, whether they're the New York Stock Exchange, the London Stock Exchange, or any other, function as the beating heart of the global economy. They're where fortunes are made, lost, and made again. But how does one make a fortune? Well, when you invest in a stock, you're banking on the company's future success. If the company performs well, its stock price may rise and you could sell your stock for a profit. This is known as capital appreciation. Alternatively, if the company decides to distribute a portion of its earnings back to its shareholders, you'd receive a dividend. This is another way you can earn from stock investing. However, it's important to remember that stock investing is not a guaranteed path to wealth. Companies can also underperform or even fail, leading to a drop in stock price. This is where the risk comes in. The stock market is a bit like a roller coaster with its ups and downs, but with a well-thought-out strategy and a long-term perspective, it's possible to navigate these peaks and troughs. So, to wrap up, stock investing is a bit like a game of chess. It requires strategy, patience, and a willingness to take calculated risks. It's about more than just making money. It's about participating in the growth and success of companies you believe in. In essence, stock investing is about buying a piece of a company and sharing in its success or failure. Ready to dip your toes in the stock investing pool? Here's how to dive right in. The first step on your stock investing journey is setting your financial goals. Are you looking to grow your wealth over the long term, or do you need short-term gains? Your goals will guide your investing strategy, helping you decide what types of stocks to invest in and how much risk you're willing to take on. Remember, investing isn't just about making money, it's about achieving your financial dreams. Whether that's retiring early, buying a house, or funding a loved one's education. Now let's move on to the exciting part, researching stocks. This is where your detective skills come into play. Look at a company's financial health, its competitive position in the industry, and its future growth prospects. You can find this information in a company's annual report and on financial news websites. Don't forget to consider the economic landscape and industry trends. Remember, knowledge is power, especially in the world of investing. Once you have a list of potential stocks, it's time to open a brokerage account. This is your gateway to the stock market. There's a wide array of brokerages out there, from traditional firms to online platforms. Choose one that aligns with your investing style and financial goals. Consider factors like commission fees, account minimums, and available research tools. Most brokerages offer a demo or virtual account for practice. Use this to familiarize yourself with the process of buying and selling stocks. Finally, remember that investing is a journey, not a sprint. It takes patience, discipline, and a willingness to learn. Don't get discouraged if you make mistakes along the way. They're part of the learning process. Starting on this journey might seem daunting, but with careful planning it can be incredibly rewarding. So take a deep breath, dive in, and let the world of stock investing open up a universe of possibilities. After all, every great journey begins with a single step. You've done your homework and you're ready to invest. But how exactly do you buy stocks? Well, let's demystify this process together. The first step to buying stocks is to open a brokerage account. This is pretty much your gateway to the stock market. It's like opening a bank account, but instead of storing cash, you're storing stocks. There are many online brokerages to choose from, each with their own unique features and fees, so be sure to do your research before you commit. Once you've got your brokerage account set up, you're ready to place an order. This is where you decide which stocks you want to buy. You can search for a company by its name or ticker symbol, which is a unique series of letters representing that company on the stock market. Now here's where it gets interesting. When buying stocks, you can choose between market orders and limit orders. A market order is when you buy a stock at its current market price, while a limit order allows you to specify the maximum price you're willing to pay. Market orders are generally filled quickly, but the price could fluctuate between when you place the order and when it's filled. Limit orders give you more control over the price, but there's no guarantee the order will be filled. Last, but definitely not least, is the importance of diversification. This is a strategy that involves spreading your investments across different kinds of stocks to reduce risk. Think of it as not putting all your eggs in one basket. Diversification can help smooth out the ups and downs of the stock market and can be a good strategy for long-term investing. So, there you have it. Buying stocks is not as daunting as it might seem. It's about doing your research, understanding your options, and making informed decisions. Remember, buying stocks is more than just a click of a button. It's a strategic move towards your financial goals. Investing in stocks is not a set-it-and-forget-it game. It requires constant monitoring. It's like tending a garden. You don't just plant the seeds and walk away. You water them, remove the weeds, and ensure they get ample sunlight. Now, you might be wondering, how do I monitor my investments? Well, it's a multifaceted process. Firstly, you need to track the performance of your stocks. You can do this through brokerage accounts, financial news websites, or investment apps. They provide real-time data on stock prices, dividends, and other important information. Keep an eye on these indicators to understand how your investments are doing. But remember, investing isn't just about watching numbers go up and down. It's about understanding why those numbers are changing. Are the company's earnings improving? Has there been a change in management? Or perhaps there's a new product or service that's generating buzz. All these factors can affect a stock's performance. Next, let's talk about when to sell stocks. This is where it gets a bit tricky. It's easy to panic when you see a stock's price dropping, but don't let fear guide your decisions. Instead, consider why the price is falling. If the company's fundamentals are strong and the drop seems temporary, it might be better to hold on. But if there's a fundamental issue with the company, selling might be the best option. Handling market volatility is another crucial aspect of monitoring your investments. The stock market is inherently volatile, with prices constantly fluctuating. This can be nerve-wracking, especially for new investors. But remember, investing is a long-term game. Short-term volatility shouldn't deter you from your long-term goals. Instead, use it as an opportunity to buy good stocks at lower prices. To sum up, monitoring your investments is a proactive process. It involves tracking performance, understanding market trends, making informed decisions about when to sell, and handling market volatility. It's not always easy, but with time and practice, you'll get the hang of it. Staying on top of your investments will help you make informed decisions and maximize your returns. So we've covered a lot today. Let's recap on the key points. Firstly, we've learned that anyone can venture into stock investing. It's not a secret society, it's a matter of understanding and applying the right principles. Secondly, we've discovered the importance of research. It's about not just buying any stock, but making informed decisions based on knowledge and understanding of the market trends and the company's performance. Thirdly, we discussed the strategy of buying stocks. It's not about timing the market, but time in the market that matters. We also touched on the significance of monitoring your investments. It's not a set-it-and-forget-it game, but one that requires constant vigilance and adjustment as needed. Lastly, we underscored the value of diversification. It's about spreading the risk, not putting all your eggs in one basket. Remember, stock investing is a journey, not a sprint. With patience and perseverance, you can build a fortune one stock at a time.